Let nothing disturb you. Let nothing frighten you. All things fade away. God never changes. Patience obtains all things. Whoever has God lacks nothing. God alone suffices. Saint Teresa of Avila. Understanding financial systems, banking, currency, and debt. Money is one of humanity's most powerful inventions. It connects individuals, businesses, and governments through a shared system of trust and value. But beneath that simplicity lies a complex structure that defines how power moves through society: the financial system. At the core of this system are three key elements: banking, currency, and debt. Each plays a distinct role in shaping economies, influencing governments, and determining who holds real control over resources. Let's begin with banking. Modern banking began as a service for storing gold and valuables. Over time, banks evolved into institutions that not only held deposits but also issued credit. When a bank gives out a loan, it does not lend existing money, it creates new money in the form of debt. That credit enters circulation, expanding the money supply. This process gives banks a unique form of power: the ability to create money through lending. Central banks, such as the US Federal Reserve or the European Central Bank, sit at the top of this system. They manage interest rates, regulate money supply, and act as lenders of last resort during crises. Through these mechanisms, they can influence inflation, employment, and economic growth. While they are often described as independent, central banks are deeply intertwined with governments and financial markets, shaping national and global policies alike. Now, consider currency, the foundation of trade. Currency is more than paper or digital entries. It is a symbol of trust backed by a government and accepted by society. For most of history, currencies were tied to tangible assets like gold or silver. Today, most are fiat currencies, meaning their value depends on public confidence rather than a physical reserve. This gives governments the flexibility to manage their economies, but it also means that trust, not metal, underpins the system. The global currency system is interconnected. The US dollar, for example, remains the dominant reserve currency, used in most international transactions and held by central banks around the world. This gives the United States significant influence over global finance. When the dollar strengthens or weakens, economies across the world feel the impact, from trade balances to commodity prices and debt repayment. Debt, the third pillar, binds the system together. Debt allows individuals to buy homes, companies to grow, and governments to fund public services. It is both a tool for progress and a mechanism of control. Every loan creates an obligation, not just financial, but structural. Nations that borrow heavily often find their policies influenced by lenders or international institutions. Interest payments can shape budgets for decades, diverting funds from public needs to debt servicing. In modern economies, debt has expanded beyond simple borrowing. Financial instruments like bonds, derivatives, and credit swaps create layers of obligation that can multiply risks. The 2008 global financial crisis revealed how interconnected and fragile this structure can be. When trust breaks down, the system itself can seize up, requiring government intervention to restore stability. At the highest level, financial systems reflect power: who controls credit, who issues currency, and who bears the burden of debt. These forces shape economies and societies more deeply than most political decisions. Understanding them reveals how wealth and influence are distributed, and why economic policy often favors stability and confidence over radical change. Yet the system is not static. Digital currencies, decentralized finance, and new technologies are challenging traditional structures. Some see this as a democratization of finance, giving individuals more control. Others see it as a new phase of concentration, where data and algorithms become the new levers of power. In the end, financial systems are human creations. They depend on trust, law, and cooperation, whether through banks, currencies, or debt. These systems define how resources flow and how power is exercised. By understanding them, we begin to see not just how money works, but how the world itself is organized. If you like our videos, feel free to like and subscribe to Template Hub Driver, or contact us at templatehubdriver.com, or just email templatehubdriver@gmail.com.